Our next presentation is from 360 AMC, 361, Mr. Prasad Nandurbarkar. He has a very interesting profile. I'll just read out since it came out. He's Executive Vice President, Zonal at South AMC. He'll be working closely with Mr. Anunaya Kumar and be responsible for building the market share of 361 AMC. He has 23 years of experience and worked in Gujarat and South India. Before joining 361 AMC, he was heading White Oak and has worked in HSBC, Invesco, Morgan Stanley and Franklin Templeton. So he has added a personal element also. He is happily married to Megha and blessed with 2 children, Swara and Stuti. And more. In his free time, Prasad loves singing. I think next time he should do it today. Listening to music, playing badminton and cricket. Please join us in welcoming Mr. Prasad to 361 family to the dais.
Thank you, Team IFA, for giving us and giving me another opportunity. A warm welcome to the new year. Happy Pongal, happy Makar Sankranti to all and everyone. I think last few years, AMC has been running a very interesting campaign, right? What is that campaign around? Mutual fund? What is the campaign? Mutual fund? Speak louder. Mutual fund sahi hai, right? Now, I am just asking you a question. Khali mutual fund sahi hai? Is only mutual fund right? Somebody was saying yes, okay. Advisor zaruri hai. So now if you are saying advisor zaruri hai, so then I will say mutual fund sahi hai, but only mutual fund is not sahi. Because your job, my job, is to add value to the investor portfolio. So there is something which is known as advisor alpha, right? Now today, again, let me again ask you a question, flip it the other way. Today, what do you think is your biggest competition in the mutual fund? Ajay sir? Huh? Digital? Direct, okay. Real estate, okay. Vivek sir, why so silent? All this online platforms, sir, you said it rightly, right? And all this magazines publishing the mutual fund numbers, right? So trust me, believe me all, I think the biggest competition to you is not any MFD or any other fellow distributor, but it is all these online platforms, because it's very easy to show you the mirror, right? Past performance is very easy to show, right? Top performing funds in last 1 year. And that actually becomes your competition, because then it's very easy for the client to pick it up from the website, which are the best performing funds, and just invest, right? So that is your competition. Now, second, and again coming back, yes, mutual fund sahi hai, sahi tha, sahi rahega, but only saying mutual fund sahi hai is not going to help any one of us to go in future, right? So today, what I intend to do, I'll speak something about how a blended portfolio, what a power of blended portfolio can really help you as an advisor to add value to your client, thereby adding the advisor alpha and giving something to the client which will help you to retain the client with you for a very, very longer time. Second, end of the day, let's be, very, very sure on one thing, that all of us are in this business, one, helping our clients achieving their financial goals, their financial dreams. At the same time, all of us are in this business where we also want to earn money, right? So I'll explain you how you can build a second stream of income for yourself within the spectrum of investment, and how you can build a steady income where your incomes will not have more fluctuations, right? So with that, Let me get into my mainstream presentation. So I am sure all of us have seen this many a times, even in past. So what India offers as a country is plethora of opportunities. And I think all of us, Chetan was asking all of us on the GDP. So if you look at India's GDP, per capita GDP USD has been growing steadily. So today we are at almost 2,600, right? But look at the next graph. GDP growth in select global economies. When you compare India to China, to US, UK, Japan, Italy, France, Germany, just look at it. 20, 21, 22, 23. So I think we've been one of the most consistent growing economy because it's like the playground where you play the match. If that is not conducive for batting, right, and you will not win the match. Similarly, we all are in the business of making money for our clients. So if the economy is not conducive, right, we will not make money. So fact is, India is growing and growing very, very consistently compared to other economies of the world. Now, and this is not just on the listed space, even on the private equity, and I'll come to it. So on the left bar, what you see is the performance of Indian economy, Indian MSCI India against other, South Africa, Indonesia, how we have done. So we have fairly fared well across the time frame. If you look at our ranking, we've been ranked 2, 2, 4, 2. So we've been ranked fairly well. But what is very important on the other side, there is another dimension to the market, which is your private equity. So in private equity space also, what has really happened in India is that the number of exits have doubled from 2018 till 2024. I am sure many of your clients, right, would be buying NSE or many other stocks in the private equity space, right? Now, trust me, sir, if he is doing that, there are few challenges to it, and we'll see what are those challenges. But fact is, Indian stock markets are providing opportunity not just on the listed space, but we have equal good amount of opportunity even on the private equity space. But it's only what you need to have, we'll see as we further deep dive into the presentation. Now, will a blend of listed and private equity make sense? So on the left hand bar, what you see is that is the performance of Nifty 50, Nifty mid cap, Nifty small cap over a period of 3, 5 and 10 years. The average of the listed indices has been about 15%. This is the average we have taken. And on the bottom, what you see is the performance of 361 mutual fund scheme, the average performance of our funds, which we have managed in the private equity space, and that's about 20%. This is at the backdrop of last 3-4 years being really very bad for the private equity space. As Ajay sir was also mentioning that on the alternates you have Cat 3, you have Cat 2, Cat 1. So Cat 2 typically comes under the private. So private equity is your typically Cat 2. And I'll come at the end that because somebody was asking from here about the tax efficiency of Cat 3. But I think it's absolutely, category 3 is absolutely tax efficient compared to your Cat 2. But obviously it is the difference in the what returns you would derive. Now, if you look at a blend, right? Now, if you are able to create a portfolio for your client, blending your listed equities and private equity, and if you are able to deliver 3 to 5% excess alpha, Sundar sir, will it make sense or not? It will make sense, right? You know why it will make sense, Vivek sir? It's about returns, is about adding that additional alpha to the investors, because end of the day, sir, what investors also look at is what returns you make for them, right? So in the bull run, every investor becomes a fund manager. But in markets like this, so I am not saying bull run is over. I don't want to make that statement. We still have a long way to go. And I'm always bullish. So on India, either you need to have either an over bullish wave or slightly less bullish. You can't go bear on India. So that is something I believe, that's my personal opinion. I'm not enforcing that on anybody. But fact is, a blend, if you are able to create a blend, and if you are able to deliver a superior alpha, this is going to add additional advisor alpha from your side. And that will help you to retain the client for the longer term with you. Because again, going back, mutual fund sahi hai aur sahi rahega. But fact is, mutual funds are becoming commodity product, right? Every website, every paper, people know which are the top performing funds. And that's your biggest competition, right? Moving ahead, now look at, I'm sure all of us we know that, so I'll just quickly touch base. India ready to leapfrog its growth curve. So, what is really changing in India? The sector specific pro-growth policies, ease of doing business, rapid privatization and the asset-less sales, channelizing household savings into financial market, reducing cost, credit of intermediation, streamlining public finances and efficiency in allocating capital. Now, this is the slide which I had showed to all of you in my last presentation. This is just the recap, because again, if you are investing into an economy, is that economy or is that asset class a compounding machine? And fact is, Indian stock market has been a compounding machine. So if you look at the graph, 20-year, 20% compounding rate. So in India, there are about 75 companies which have compounded at 20% over the last 20 years, against only 19 in US, only 15 in China and 0 in Japan. While even if you look at 10-year compounding hit rate, then in India, you have 20% of the companies, while against that you have only 11% companies in US and only 4% companies in China. So that's the power of the Indian stock markets, and Indian stock market will continue to remain as one of the biggest compounding machine. So if you are investing into one of the largest compounding machine, that will help you to create significant alpha and significant wealth for your clients and even for your own self over a longer period of time. At the same time, on the one side you have your listed bucket. On the other side, there are many hidden gems in the private equity space. Now, these are companies which at some point of time, eventually will get listed, right? And the beauty is that, these companies can give you a significant upside. So last week I was in Bangalore with one of an MFD who operates out of HSR layout. Fortunately for him, in last about 2 months, he was able to get an inflow of almost 25 to 30 crore. Ajay sir, and sir, from where he was able to get? Most of his investors are working with Swiggy. Swiggy got listed, right? They got ample of money and he got those invested, right? So there are many such stories in the private equity space, but what is very important to note here is that in India, there are 1,300 unlisted companies with a EBITDA in excess of 6 million, right? So obviously we know few names like Indira MF, Manipal Hospitals, Vastu, then you have Pine Labs, you have Rare Rabbit. So the jacket which I am wearing is from Rare Rabbit, right? So this company, I am sure some point of time will get listed and probably they might appoint me as their brand ambassador, because I have been wearing this for a very, very longish period of time, right? But fact is, there are many such hidden gems in the private equity space. Now, for an individual investor, is it, very, very easy for him to identify what are the gems, what is good, what is bad, what is ugly? The answer is practically no, right? At the same time, the quantum of money you would invest, right? And by investing that money, if you are going to buy only 1 or 2 stocks, it's of no use. At the same time, if I offer you a product which can give you a blend of listed and on the private equity which can give you 8 to 10 stock, overall, right? It will help you to reduce your risk and it will help you to get a better alpha eventually over a longer period of time. Now, just look at this. Private equity space has got access to innovative businesses. So obviously we know in the last few years, scams, Zomato, Prudent, many companies have got listed. But there are many new names in line which eventually, Razorpay, they have already announced that next year they will hit the IPO. Then you have somebody like Lenskart, Prelabs, Purple and many others. Now, if you look at the investing landscape in the private equity, this is basically broken into three parts. The first stage is your early stage. Now this is where the investment time frame is very, very long. You have to invest with a time frame of 8 to 10 years in mind. So the holding period is very, very long. If you move to the next stage, which is the growth stage, it's about 5 to 8 years. And when you come to the late stage, the beauty here is most of these companies, they plan to get listed in 12 to 24 months or 36 months at best. So the time horizon comes down and your alpha can significantly go up. Now, but there are challenges you face if you are an individual investor, if you are investing into private equity. What are those challenges? One, accessibility. High barriers leading to inability to access the best deals at the best price. Liquidity. Because these products are, private equity gems are structured in a way that liquidity always remains a concern. It's not very easy to liquidate. Third, getting the right price discovery, because if you're going to buy only, a 10,000 or say 1 lakh or 5 lakh of NAC, you will not get the right price discovery. Now, how all of this can get solved? Now, that's where a blended portfolio can mitigate all this risk. So, one blended portfolio can give you liquidity, it can give you exit. So, I'll come to that at the end. A blended portfolio will offer you an optimal price discovery through in-depth investment assessment, single window to access to both your listed and private equity, and access to an experienced investment team and fund management team to both. So at 361, and let me just explain this all of you to a very, very interesting product offering which is in category 3 on the alternate space. So we call this as Equity Opportunity Series 4. This is a blend of 70% of the portfolio will get invested into listed and about 30% will get invested into unlisted, which is your soon to be listed in the next 12 to 24 months kind of a thing. Now on the listed, what we intend to do, this 70% of the listed portfolio, 25% of that will be invested into special situation like demerger, pre-IPO, QIPs where the alpha is high, and the balance 70% will be into high conviction stocks. On the private equity, we intend to buy 8 to 10 very, very unique names in the portfolio. Now, why 361? Because today in India, I can honestly tell you and upfront tell you, there are very few mutual fund companies, very few asset management firms which have equal strong platform on the listed as well as on the private equity space. And that's where, tying up with 361 can be a great offering. So on the listed, from where do we want to create the alpha for all of you? Through a bottom-up stock selection with the robust SCDV framework, turnaround opportunities, and with a combination of late stage, which is your pre-IPO opportunities. Last time I spoke about this, so I will not bore you, but just to give you a quick recap on this framework, SCDV framework, what does this ensure? This ensures that at any point of time, if our funds are not in Q1, we will be somewhere in the middle of Q2 or at the bottom of Q2 and will not fall into Q4. Proof of the pudding is 361 Focus Equity Fund, which completed 10 years last year in the month of November, has been awarded as one of the top 5 wealth creators in the last basically 10 years. In fact, there was an article 2 days back which was talking about which are the top 4 focus funds to be invested in the year 25. And among the top 4, the number 1 fund was again Focus Equity Fund of 361. So this framework is what something which is very, very unique. I will not bore you much with that. A bit on Investment Wiki. Investment Wiki, this is the proprietary, I would say, software of 361 which the team has created. So what we have beautifully done is that the expertise of the fund management is married to the artificial intelligence. Because in today's world, if you want to increase the efficiency of your fund management team, right, you need to have AI integrated into your fund management system. And that's what exactly Investment Wiki has done. Now this is just to tell you about the stellar track record of the 361 team on the listed. So I'm sure all of you know Anup Maheshwari. Anup Maheshwari has been one of the legendary, I would say, fund managers in the industry. Anup joined this industry in the year 1997. He started his career with then DSP Merrill, then DSP BlackRock. So when he was with DSP for a period of 23 years, from 1997 till about 2018, he created an alpha of almost 5 to 7% on BSE and NSE. He moved to 361 AMC in the year 2018 September as one of the co-founders and the chief investment officers. And since then, it's been about now almost 9 years. Again, he's been able to create an alpha of almost 5 to 7% over BSE and NSE. So if you look at this team, the listed team of 361 has a stellar track record of almost 32 years of creating alpha, creating wealth for our partners, for our clients. We manage today roughly about 50,000 crore on the listed space with a 15-17 member large team. Now, at the same time, if we move ahead, in the private equity, what is very, very important, and that's where 361 plays a very big role. For the portfolio construction in the unlisted space, the biggest thing is you need differentiated sourcing. So if you look at a deep network with quality investors and 7,000 plus founders. So the advantage to 361 is this. Today we have connect with more than 7,000 founders in India, because I can tell you with utmost surety and honesty, any founder today in India would have come to 361 either at the early stage or mid stage or late stage. And that's the advantage. And second, enhanced due deal. So the deal origination happens, deal screening and due deal execution closing, identifying 5 to 10 actionable investments and realization and exit from the companies. Now, what we saw on the previous slide was the leadership and the capabilities of 361 on the listed. On the private equity, again sir, today I can tell you, today we are the largest in the country. We manage about 25,000 crore in the private equity space, right? And there, just look at the team size. It's a 36-member team, one of the largest in the private equity. So, in 361 mutual fund, all functions put together, sales, marketing, fund management, we are about 155. Sundar sir, out of that 155, 62 people are only on the fund management, which includes about 17 on the listed, 36 on the private equity, and the balance on the real estate. So, and look at the many firsts for 361. The first private equity fund was launched in 2016. The first pre-IPO fund was launched in 17. First multi-asset fund 23. The first secondary fund. So, sir, a big thank you to you for supporting us in the SOF 13. So, if you may just stand up, because I think a big round of applause and a big thank you to you. So, this was a very, very interesting offering from 361. So between SOF 12 and SOF 13, which was India's first secondary fund, which was launched last year in Jan, the SOF 12 series, SOF 13 was launched in April. We have been able to get a total commitment of 5,000 crore. And I just missed one thing on the listed next week. And I can tell this, I can obviously, I won't be able to name that, institute. But next week on the listed space, we are getting a mandate of 5,000 crore from a very large endowment pension fund. Now, when a large endowment pension fund is signing with you with and giving you a mandate of 5,000 crore, they do their due deal well. So among all the asset management firms in India, the only shortlisted firm has been 361. So even on the private equity, the strength has been very, very strong. So that's where, it's very important. So this is a bit on the team. Anup Maheshwari is the co-founder, CIO. Raghav, I'm sure all of you know, is the CEO. Samir Nath is the CIO for the venture capital. This is the team on the listed which is going to manage this equity opportunities for. This is the team. Quickly, a minute on this. So we have already launched this fund. We are planning to raise about 2,000 crore. The tenure of the fund is 20 years. Does that mean there is a lock-in of 20 years? No. The fund will be shut at the end of 20 years. But from the last drawdown, there is a hard lock-in only of 1 year. So somebody was asking in that AIFs have longer, exits, right? So let me tell you, this is one of the most beautiful product and very, very investor and very, very distributor friendly. There is a hard lock-in of only 1 year from the last drawdown. Post that 1 year, 1% exit load. Post that there is no exit load. So practically after 2 years, investor can take back their money even without paying any exit load. Advantage to you as an advisor, as an MFD is, here out of the total expense we charge is 2.5. We share 60% with our partners, which is 1.5 plus GST. So what you get in your hand is 1.5 plus the GST. And tomorrow, I'm sure we'll do well because all our AIFs, the alpha, minimum alpha we have created over 5-7 years has been in excess of 5-6%. So assume this 2,000 crore grows to 5,000 crore. Am I going to reduce your brokerage like a mutual fund? Here the answer is no. So your incomes will be very, very steady. They are not linked with the AUM growth. Even my AUM grows, you will keep getting income on the growth of the AUM. And even on the taxation, this is basically tax at the fund level. So what investors get, so the fund pays the tax. So it is tax paid. So investor has to just file the statement with his CA. And this being in category 3, again the advantage compared to a category 2. In a category 2, it is as per the investor's tax slab. Here it is at the fund. It is at the fund level. It is a pool. So it is at the fund level. So it is extremely tax efficient for the investor. If your investor is going to directly buy a private equity, he will have a longer lock-in because it is a blend of listed and private equity. There is absolute, practically there is hard lock-in only of 1 year. Post that, they can take that money. And third, instead of your client buying this kind of product from any wealth management, any bank or any private banking firm, why not you offer? And trust me, believe me, I think if Ajay sir was saying at the beginning, this market is really expanding. And in the last 5 years, among the mutual fund, among the alternates and PMS, alternates has grown at 55%. One might say the base is low, but fact is alternates have grown at a much more faster rate. And about 2 weeks back, I was in Coimbatore. Our friends from Coimbatore are here, and there also I spoke about alternates. Let me tell you, post that meeting from Coimbatore, about 15 empanelments we got on AIF, right? That just speaks, sir, Sundar sir, of the change in the investment pattern. And I am not saying that every investor will be an investor for alternates or PMS, but you are large investors or investors who want to have something which is specialized, something where they want to have a combination of listed and your private equity. This can be a good product. So let me end by saying again that mutual fund sahi hai, sahi rahega, sahi tha. But going ahead only, saying or telling mutual funds is sahi hai is not going to help. Industry is changing, it is shaping up in big way. And it's always good to grab the opportunity before anybody else would grab the opportunity. And fortunately, with us, I can tell you, I can commit you, we have got a great and a beautiful platform which can offer you good mutual fund schemes, good alternates, good PMS, everything from one family of 361 asset management. So again, a big thank you to Team IFA for giving us one more opportunity, and because this is something this group, as I always say, is very close to me. Thank you, sir. Thank you, everyone. So between SOF 12 and SOF 13, which was India's first secondary fund, which was launched last year in Jan, the SOF 12 series, SOF 13 was launched in April. We have been able to get a total commitment of 5,000 crore. And I just missed one thing on the listed next week. And I can tell this, I can obviously, I won't be able to name that, institute. But next week on the listed space, we are getting a mandate of 5,000 crore from a very large endowment pension fund. Now, when a large endowment pension fund is signing with you and giving you a mandate of 5,000 crore, they do their due deal well. So among all the asset management firms in India, the only shortlisted firm has been 361. So even on the private equity, the strength has been very strong. So that's where, it's very important. So this is a bit on the team. Anup Maheshwari is the co-founder, CIO. Raghav, I'm sure all of you know, is the CEO. Samir Nath is the CIO for the venture capital. This is the team on the listed which is going to manage this equity opportunities for. This is the team. Quickly, a minute on this. So we have already launched this fund. We are planning to raise about 2,000 crore. The tenure of the fund is 20 years. Does that mean there is a lock-in of 20 years? No. The fund will be shut at the end of 20 years. But from the last drawdown, there is a hard lock-in only of 1 year. So somebody was asking in that AIFs have longer, exits, right? So let me tell you, this is one of the most beautiful product and very investor and very distributor friendly. There is a hard lock-in of only 1 year from the last drawdown. Post that 1 year, 1% exit load. Post that there is no exit load. So practically after 2 years, investor can take back their money even without paying any exit load. Advantage to you as an advisor, as an MFD is, here out of the total expense we charge is 2.5. We share 60% with our partners, which is 1.5 plus GST. So what you get in your hand is 1.5 plus the GST. And tomorrow, I'm sure we'll do well because all our AIFs, the alpha, minimum alpha we have created over 5-7 years has been in excess of 5-6%. So assume this 2,000 crore grows to 5,000 crore. Am I going to reduce your brokerage like a mutual fund? Here the answer is no. So your incomes will be very steady. They are not linked with the AUM growth. Even my AUM grows, you will keep getting income on the growth of the AUM. And even on the taxation, this is basically tax at the fund level. So what investors get, so the fund pays the tax. So it is tax paid. So investor has to just file the statement with his CA. And this being in category 3, again the advantage compared to a category 2. In a category 2, it is as per the investor's tax slab. Here it is at the fund level, it is a pool, so it is at the fund level, so it is extremely tax efficient for the investor. If your investor is going to directly buy a private equity, he will have a longer lock-in because it is a blend of listed and private equity. There is absolute, practically there is hard lock-in only of 1 year. Post that, they can take that money. And third, instead of your client buying this kind of product from any wealth management, any bank or any private banking firm, why not you offer? And trust me, believe me, I think if Ajay sir was saying at the beginning, this market is really expanding. And in the last 5 years, among the mutual fund, among the alternates and PMS, alternates has grown at 55%. One might say the base is low, but fact is alternates have grown at a much more faster rate. And about 2 weeks back, I was in Coimbatore. Our friends from Coimbatore are here, and there also I spoke about alternates. Let me tell you, post that meeting from Coimbatore, about 15 empanelments we got on AIF, right? That just speaks, sir, Sundar sir, of the change in the investment pattern. And I am not saying that every investor will be an investor for alternates or PMS, but you are large investors or investors who want to have something which is specialized, something where they want to have a combination of listed and your private equity, this can be a good products. So let me end by saying again that mutual fund sahi hai, sahi rahega, sahi tha. But going ahead only, saying or telling mutual funds is sahi hai is not going to help. Industry is changing, it is shaping up in big way. And it's always good to grab the opportunity before anybody else would grab the opportunity. And fortunately, with us, I can tell you, I can commit you, we have got a great and a beautiful platform which can offer you good mutual fund schemes, good alternates, good PMS, everything from one family of 361 asset management. So again, a big thank you to Team IFFA for giving us one more opportunity, and because this is something this group, as I always say, is very close to me. Thank you, sir. Thank you, everyone. Sir, on the completion of getting 1,000 investors, just 20 days back. So my sense is by April, May of this year, we should be around 1,000 crore. And I think by October, November, I think we should be able to close this fund. So ticket size as per SEBI it is 1 CR, but investor can come with a check of 25 lakh. So 25 into 4 is what they can come. So again the and one more advantage sir here is that if this year, if listed markets are going to be tipsy-topsy, right? Trust me, the private equity portfolio will not have any impact of the market. Tomorrow if there is a war, your private equity portfolio will be insulated for any of the market event. So even it is good for the client. So in a way you are giving him a diversification, you are giving him the benefit to get into a blended portfolio, and at least one portion of his portfolio will be insulated from any thing which is not in favor of the listed space. So liquidity, you are saying for the client level. So from the last drawdown, there is a hard lock-in of only 1 year. Post that, there is 1% exit load only for 1 year. Post that, there is no exit load also. Yeah. So, sir, the beauty is because this is a blend, they can withdraw the entire money. So what we'll do, so I'll sell the 70% of my portfolio which can be easily liquidated. I'll sell that and I'll give back the money. So beauty, sir, of the blended portfolio is offers liquidity to the client. It is tax efficient. It helps them to get a better alpha compared to a pure listed. Plus, instead of them buying into 1 or 2 single stock, you are getting a portfolio of 8 to 10 stock on the private equity space. So, NAV, sir? NAV, sir, every Thursday we declare the NAV. Every Thursday, once in a week, the NAVs are declared, sir.
And 70 to 80% listed equity இன்றதுனால வந்து பாத்தீங்கன்னாக்கா liquidity problem கிடையாது. Taxation வந்து fund level ஆயிடும். So investor withdraw பண்ணும்போது வர profitக்கு திரும்ப tax filing பண்ண தேவையில்லை because fund level tax pay பண்ணிடுறோம் நமக்கு அதுல. And the biggest advantage for NISM 5A mutual fund certificationsக்கு வந்து NISM 5A mandatory, PMS க்கு 21A mandatory, but AF category 2 and 3 க்கு certificate is not mandatory. And if someone wants to avoid taxation income ஒரு லெவல்லே காட்ட வேண்டாம் அப்படினாக்கா ஃபேமிலி லெவல்ல யாராவது பர்சன் மேல கூட எம்பல்மென்ட் பண்ணி நம்ம business
without
நமக்கு அதல.
Yeah, you are right. So, without ARN also you can take a code with us. Again, advantage here is that if Sundar sir wants to put his own money under his own ARN, we still will pay him the brokerage. Unlike a mutual fund, if you are investing your own money under your own ARN, we will not pay you the brokerage. In AIF, we can pay you the brokerage. No, so this is the first. Till now we have launched 6 AIF. All of them have been only on the listed. But while on the pure play private equity, we have launched about 13 series till now in the last about say 6 to 8 years. So this is the first attempt to launch a blend. Because as I said, we have we have best of the teams both on the listed and the private equity. Henceforth we can do that and we can take a call to launch a blended portfolio.
We'll take more questions.
So here, sir, here, one, thanks for asking this question. See, like on the mutual fund, again, where AIFs are an advantage to you. Mutual fund, the performance to the client is available anywhere and everywhere, right? So easy for him to watch, track, easy for him to exit. AIF, he has to come to you. So every month we will provide you the performance statement, and it's available to you. It's been, it will be provided to you every month, and then you can basically share with your clients the performance on his AIF. Anyone?
Compulsory, demat is mandatory.
Compulsory demat.
But selling time la demat la sell பண்ண முடியாது. Mutual funds once unit demat க்கு move ஆயிடுச்சுனா demat la தான் sell பண்ணனும். பட் இங்க யூனிட்ஸ் கஸ்டடியன் தான் டிமேட்ல போகும். 2 இயர்க்கு அப்புறம் நீங்க வந்து செல் பண்ணனும் அப்படி நினைச்சீங்கன்னா ஃபார்மை எங்க கிட்ட தான் சப்மிட் பண்ணனும். நாங்க ஆட்டோமேட்டிக்கா யூனிட் ரீயூனிட்ஸ் பண்ணிட்டு செல்லிங் பண்ணி கஸ்டமர் பேங்க் அக்கவுண்ட்க்கு பேமெண்ட் போய்டும் அதுல. அண்ட் இதுல வந்து பாத்தீங்கன்னா நான் முதல்ல சொன்ன மாதிரி மியூச்சுவல் ஃபண்ட்ஸ்க்கு ஜிஎஸ்டி நம்ம பே பண்றோம். பிஎம்எஸ்க்கும் ஏஎஃப்க்கும் ஜிஎஸ்டி will be added. உங்களுடைய 100 rupees ரெவென்யூ அப்படினாக்கா 18 rupees ஜிஎஸ்டினா 100 plus 18 தான் உங்களுக்கு அக்கவுண்ட்ல வரும் உங்களுக்கு அதுல.
For more questions, we can take later. So,
Sure.
Thank you, sir.
Thank you, sir.
Contact Mr. Ravi, Mr. Prasad. They are available locally. Sir is also available here. Invest in a blended portfolio to create alpha. Now, I request Mr. Yuvraj to give a memento to Mr. Prasad.